And it's officially our favorite time of the week. We have the market open. We're coming off that long Labor Day weekend or holiday, that extended holiday. Hope all you guys are well, enjoyed the time with your loved ones and that extra day of rest we had. But we're back at it, and I want to record a quick video with us coming up on the first pertinent news of the week. We got the RBA interest rate. So we're gonna all eyes on Audi. We're gonna be taking a detailed look at the Audi currency in this video. So let's scroll over to a chart and see what we got. So let's start off today before we get into the big picture of what's going on behind the market. We see we got the AXY, or the Australian currency, displayed on the screen. Before we take a look at these technicals, let's do a little deep dive into what we can figure out behind the chart. So I actually got a little deck here for you guys, a couple of things pertaining to the Audi. One of the major things we preach and we speak about in our member center is going to be some of the relationships we can find between these currencies. It's going to give us leading indications to how we may want to facilitate trade. So one major thing we are noticing is global trade is contracting. We're getting a lot of news out of China, getting a lot of things on the global stage as far as a global slowdown. So we notice here that global trade is falling as the global economy moves more into a recession or a slowdown. The contracting economy is going to be bullish for the USD. So that's a extra give me there for you guys as you're, lining up and doing your technical work on some of your trades this week. So here's that chart. Global manufacturing inventory cycle upturn has been rejected. We're starting to dip. The only one that's improving is the USD. So next, we did just speak about how global trade has been affected, and China being one of the biggest trading partners with Australia. We are going to keep eyes on what's going on in China. We do know, if you not under a rock, you kind of hear all the news and the hoopla about what's going on in China, especially in the real estate market. And it is of pertinence. That is something that we want to keep our eye on and see if that's going to actually expand, or that's going to be moving to the rest of the world or to a country near you soon. So China's is officially in deflation. Their consumer prices fell into deflation in July for the first time since February 2021, with factory gate prices extended their decline as the world's second largest economy struggled to revive demand. So beginning of the year, we heard this big hoorah about opening causing a surge in demand, and China was going to save the day. We're actually seeing the opposite. So, we've been playing accordingly and actually mapping our trades and that actual overall theme. So, new bank loans also down in China. Now, this is a chart that's going to show the important sectors in the world, so we can see how vast and how vital China's housing market is. Now, they are a economy of savers, and they utilize their housing market similar to how we utilize our stock market in the US. So we can see, fires in China, that's horrible for the rest of the world. So we'll see how that unfolds. Approximately 70% of household wealth in China is stored in property. China real estate growth around 60 trillion, which is a whopping 30% of China's GDP. The problem is, after years of excess, the property market is collapsing, and it will take China's GDP with it. So the economic powerhouse, China, finally running into a few roadblocks, kind of stumbling as far as looking for economic growth. So we are speaking about Audi, and you may say, why does this all matter? Well, again, the word leading indications. So we have more confidence in our trading, we can become more consistent, and we can actually facilitate and participate with trends that are developing in the market before we actually see them on our technicals. So the Audi is sensitive to the outlook for global growth. A lot of the charts we were looking at earlier, in particular, outlook for China, the market for a strong recovery. The market was looking for a strong recovery in China, but is unlikely as the export markets are dried up, which can be seen in recent data. Also, terms of interest rates, the RBA is probably done. And let's go ahead and we're gonna give you guys some more background on the rates. And let's go ahead and we're gonna go ahead and pivot over to rates so we can get a little bit more concrete of what the RBA may do in this meeting that's coming up here in about an hour. So let's fast forward here. And we got an article here from Reuters showing that the dollar did firm up a little bit. Now the meeting Governor Philip Lowe lasts before Michelle Bullock takes over, and focus on what will be gleaned from the outlook. Australian cut its wheat export forecast on Tuesday. So not much there. There was a little portion of this article. There we go. So the Aussie was about a 0.5% lower, softer than expected inflation data for July has markets all but certain the cash rate will stay at 4.1. So we're not expecting any hike. We all see that in the consensus. They're looking for the rates to stay the same, which all in all will be bearish for the Australian dollar. So they do stay the same. We should see a nice little volatile move to the downside once we have this actual data released. Now, I did have one more for you guys. Had another chart here. Let's do this. Let's take a look at the actual technicals. We can see that the Australian dollar has been in a downtrend. We consolidated here, found a top here, double top, drop, consolidated, made another double top, we dropped, and now it looks to be a little bit of a retrace. Look for this actual to reject at this level off this smaller double top. Got a nice level here. Look for the Australian currency to continue its downside action. Now, as far as plays that we're looking to execute on and some trades that we're already in, it's going to be this Australian dollar. So we caught nice trades through here around the 67-ish area. We've been riding this thing down and slowly increasing our size into this trade. Last week we were telling you guys kind of watch out for this chop here. We did kind of spike up a little bit more than we liked. We actually took some additional entries on these tails, and we're now riding this thing down. So the old break and retest method, we look for this to drop, get a little bit of pullback after the news has been settled in, and a continue move down lower. So we're eyeing this 62 spot. In the meantime, longer term, we are going to be looking for the 60 level. So we'll see how this plays out and continue to size into and ride this trade on down to the downside. So another trade that's kind of more fresh is Audi JPY. Now, this is going to be another global bellwether. We can see that this is playing out pretty nicely. So we got another almost double top formation here. Drop. Now we are starting to kind of engulf this. It is early in the session, but we're at a nice level playing off some nice resistance overhead. We can see these represented from these candle tails. Look for this continue down to 92. Longer term, get down to the 90 area. We can see the trend are starting to get some change in market structure, and we can see this continue to go down to the downside. So AJ, another nice pair that we're looking at, we're itemizing today. So let's see this next actual chart here. So this next next pair up we do have is the Audi Canadian dollar. And we can see a nice move here.